And welcome to another video on what happened in crypto today, financial literacy 101. Yeah, it's been a while since we uploaded the video. That was because we're actually working on all the settings. As you can see, you can have a clear, legible words on your screen which you can read without much difficulty. And it took a lot of days for us to do that. And at the same time, we have to just, work on some technicalities, freshen up, take our time to rest, and come back so we can give you the best. So we start without wasting much time. Let's get into today's business. So the first thing we have here is one of our great analysts is of the opinion or opines that Bitcoin may have bottomed before its traditional cycle low. And what this actually means is Grayscale Panda is actually of the opinion that we are no more in a 4 year cycle, no more in the traditional 4 year cycle where we follow the Bitcoin halving as a cycle. So now that because Bitcoin is getting to be a widely adopted cryptocurrency and asset. So there are a lot of macroeconomic influences or things that are actually indicating and propelling the movement of Bitcoin in the market. So now let's just talk more about what it says. So it's a crypto focused asset manager Grayscale said that Bitcoin price may have bottomed earlier than the traditional 4 year cycle, which would imply a cycle low in September or October. So saying that if we break out the 4 year cycle, now we should expect a low by either September or October. So the head of research says that Bitcoin has grown up as an asset that is increasingly driven by macroeconomic factors. If the Fed forgoes rate hikes and economic growth holds up as well, Bitcoin price may already have bottomed. That means we are not expecting anything lower than this. And he said this in the Wednesday report. So earlier in July, crypto brokerage K33 pointed to more than 50% of Bitcoin supply being held at a loss as another signal of imminent market bottom, arguing that Bitcoin price has historically bottomed weeks after more than half of the supply fell underwater in prior cycles. So let's look at this. You can see the price range. This is the data for the price range. This is the ISM manufacturing, the log price, and the 2 year UST real estate. So Bitcoin price cycles that corresponds to this shift in macro backdrops. So that is why Grayscale. So I won't talk much about this. If you want to see more about this, you can go to Cointelegraph and hear more about this information. So also going to talk about a very next, very, very, very interesting topic to discuss, and that is the fact that imagine me telling you that don't worry, the next bull cycle is going to be sponsored by me. So what we have here is we're having a cryptocurrency platform claiming or making a bold statement that this is going to get a proper lift in the next cycle from them. So Robinhood and Hyperliquid says Bitcoin is going to get lift from them, and this is said by Bitwise executive. So Bitcoin is finally showing signs of a bottom, but the next bull market we have a different source. That is the very strong claim. I said we're already seeing a bottom, and this is like another person talking about the fact that we are no more following the 4 year cycle, which is something I've always been saying, right? And also saying that we are already at the bottom. So when people tell me you're already at the bottom, I don't feel like it's an instant so far. I still give it like 3, 4 months. So that would say maybe we have the bottom at September, October. I still go with the fact that September is going to be bearish, and October will be the time we have the last chance to buy, and we start having the leg up starting from the ending of October. You can look at the data of 2025, 2024, 2023, 2022 to prove me wrong. I know what I'm saying. So it's about the next bull market, we have a different source of flow of money. So TradeFi integrations, particularly Hyperliquid and Robinhood, will drive the next crypto bull market, says Bitwise Matt Ilgan. The resulting tide should lift the largest cryptocurrencies with its Bitcoin and Ethereum. So Hyperliquid and Robinhood catalyst to lift most of crypto sector. That is their own claim. Well, let's see. Let's see how it goes. And you also have to understand, these same people, they have their own coin. So say by looking at two entities that are leading this convergence from opposite sides, that is Hyperliquid Hype and Robinhood Hood. These two coins might have to just check them out if the people behind this project are so solid, and they must have at least something to back up this their claim, right? So I want to just try to invest in their assets. So now another one is there's somebody actually questioning what we've discussed so far. And that is the fact that an analyst is saying that is Bitcoin price recovery real? Yet is what on-chain data review. So this person is trying to bring us technical analysis on on-chain data. Technical analysis on on-chain data. Said Bitcoin price saw an impressive recovery in recent sessions, supported by renewed spot ETF inflows, improving macroeconomic sentiment, and growing institutional participation. The rebound has restored optimism and across the crypto market, with traders increasingly speculating that the next bull cycle will already be underway. However, fresh on-chain data points are more measured in the picture. So now let's talk about three metric moves that will determine the next move of Bitcoin in the market based on data. And this is very important. I want you to pay attention because these are very, very, very key important things to take note of. So the first thing is we have to look at the Bitcoin apparent demand. And if you don't know what the Bitcoin apparent demand is, so now I'm going to explain what the apparent demand. So is the apparent demand is a metric that tracks whether fresh capital is entering the market while demand has rebounded sharply from the severe contraction seen earlier this year. So now the apparent capital data is data that's going to let you know if there are new funds that are coming into the market, or maybe it's just still the old money. So if you're having more new funds coming to the market, that means you're having new sentiments, new conviction towards the market, and that is good for the market, right? So now let's look at the graph. So this is the apparent demand, right? So although the demand deficit is improving, let me zoom in on this. It said although the demand deficit is improving, it remains in negative territory, suggesting that a meaningful recovery in demand has yet to occur. So if you feel like this is the bottom and the bottom of the bottom, less, I believe this is not, because we follow this, we are still having it here. We are yet to have a full recovery. We are still at the bottom. We are yet to recover. And we are feeling like we're going to end it like this. You're not going to end it because we are at the bottom, not at the top. So the next thing we also have to look at, oh, excuse me, sorry about that, is the adjusted SOPR. And if you don't know what SOPR is, SOPR is the spent output profit ratio. Now, let me explain this to you. So the spent output profit ratio indicates the long-term orders are no longer capitulating at a loss. So what this means is they hold money that have been holding this asset for a particular long time. If they are beginning to lose money, they also will start having to pull out their money. That means no new sentiment, no new buyers, and even the old ones are pulling out. But now, if we look at this, it said after another closely watched indicator, the adjusted spent output ratio has recovered towards the critical 1.0 level. That means long-term orders are no longer capitulating at a loss. For example, I'm a long-term holder. I've been holding, in fact, my profit in the last bull cycle, I didn't withdraw. I still reinvested most of them into the market. So if the market is coming back to the range which I'll say, yeah, I'm seeing profits, that is a good sentiment, right? So that's going to still make me be positive with the market. So now that is that about SOP. And if you look at the graph, the technical data of SOP, how you have it here, you see, you're having it at the one at this particular zero, because this was almost the time or the range we started with in the last bull cycle. So we are now at where we started in the last bull cycle, and we're about to go. So during the first half of 2026, I just said the SOPR stayed below 1.0, reflecting widespread loss taking. It has recently recovered towards 1.0, signaling improving market sentiment. Another, which is the last indicator we have to look at right now, is the net realized profit level. So now let's look at the net realized profit level. So the net realized profit level has turned positive after months of persistent loss realization, reflecting the healthier market sentiment as investors gradually return to profitable positions. So net realized profit, what? And loss. So if the net realized profit is bigger than the net realized loss, that means the market is like this. It's going up. It's bullish. But if the net realized loss is greater than the net realized profit, that means everybody is bleeding, and that is still going to push the market further low. But now that we're having net realized profit bigger than the net realized loss, that means you're having a leg up, right? So, and then they post a question that will BTC surpass 70K? That is a question I want you to answer in the comment section. For me, 250K is achievable because I want to drive Lambo. You understand now? So, although there are technical things they are actually looking at here, they said Bitcoin continues to build a constructive recovery after defending the 60,000 zone. However, there are many things to look at here. I would still say if I would bring up my own chart from the BTC USDT chart, let me see if I can do that right now. If I'm to bring that up, you see I've stated that we are in the accumulation zone, but I'm not going to delay us much on that. Let me just quickly bring it up. We'll come back to it later on. Yeah, we'll come back to that later on. So if you look at this, we are still in the accumulation zone. Like I always said, I'm still waiting for the white curve spring that will happen below here. I think we had it go down a little bit, but you know what? We might have it around the range of 39,500 to $40,000 per month. And when that happens, that will be the last. That will be the last. Mark my words, that will be the last. And I'm being serious about that. So if you look at this, we are still in the accumulation zone because the market on the longer time frame is just still consolidating from this point to this point here, which is around 52,000 something. So next wave loading. This guy said he's waiting for the next wave. And the question is that will the next wave break out from this point or just still capitulate down here? So now that is that about the price precision and prediction. If Bitcoin is going to go beyond 70,000. Another thing that is actually getting my attention now is the fact that BitMEX exchange to shut down by September 3. And I'm asking myself, is this not the same BitMEX that say they are going to push up the next bull cycle? But that's another question for another day. So why is BitMEX shutting down? If you are part of those who hold assets or trade with BitMEX, this is very important information for you to take note. And I tell you, you don't have to fear, but you have to understand what is involved in all of this. So BitMEX will permanently shut down on September 23rd after an internal strategic business review. Users must close positions and withdraw funds before automatic liquidation begins on September 24th, 2026. BitMEX says customer funds remain fully safe despite the platform's planned permanent shutdown. So there are a lot of stories to this, and one funny thing to me is there is no clear reason why they are closing down. The company didn't, declare bankruptcy. They didn't declare loss or anything. They just said they had an internal review of their holdings by their parent company, I think HDR Global Trading Limited, and decided to close the exchange after completing a strategic review of the business. So if you know BitMEX has been one of the top leading first, digital exchange platform in this crypto space. In the year 2020 to 2022, I think they were making around $5 billion in trading volume in a day. And it's very crazy to see that such company of great magnitude to say they are closing down. But I could only point it to one thing because I understand that sometimes back then um, sometimes back then. So they had an issue with the U.S. Department of Justice and Commodity Futures Trading Commission (CFTS). They accused business of operating an illegal, unregistered derivative platform, and this made it difficult for them to regain their earlier position. I think maybe just realize they're struggling in this space and they have to put their efforts in another place. So are your funds safe? Yes. I'll tell you this, you heard it from me. Your funds, I said they say that customer funds remain fully safe and confirm that asset exceeds said that its assets exceeds its liabilities, that many companies also highlighted that this has never lost customers' funds to act throughout its operation. Yeah, business has never been hacked, unlike Bybit and Binance and the like. So they said they also want to reassure you that your assets remain fully safe and under your control during this transition period. So okay, I'm not going to talk about this. So another thing is, what do you need to do as a BitMEX user? If you're a BitMEX user, you have to understand that you can't register new accounts anymore. Also, by August 26, you guys can no longer open new positions. That means by August 26, you can no longer open positions on your sports trade, your futures trades, your options, or whatever on BitMEX. And also that by September 23, I thought by 4 o'clock United Time zone, BitMEX will permanently shut down and any remaining open positions will be automatically closed, either you're in loss or profit. So close your position. And they also said, now, this is the last part that's very important. And if you're not able to close your assets or withdraw your assets, maybe you have large assets to keep with them and you don't want to pull it out yet, they said they're going to be charging you an equivalent of $50 per month for them to keep your assets for you, or they withdraw 1% of your account balance per year as they are paid for keeping your own assets for you. So you know what to do. Our advice, if you are trading with BitMEX, is best advisable for you to withdraw your funds to be on the safe side. So now another thing is you have to look this fact that which is actually concerning is the fact that we've had crypto hacks to surge to $763 million in just the second quarter of 2026. And most of these started as an operational failure. So crypto has been so much hacked this year. Crypto has been so much hacked this year that it is crazier than previous year. So let's see. In just Q2, accounts of this sum of amounts were recorded in losses, with operational vulnerability being the single most common attack vector. So I feel like this is the time where which exchanges, and many other derivative platforms needs to work on their cybersecurity and aspect. And also, if you're maybe an enthusiast of cybersecurity, this is a task for you. You should know that this is a niche you should actually get into. The next 5, 7 years, 10, 20, you still get paid for this because people will definitely want to hack them the way they're hacking financial institutions. So over 70% of the funds drained were routed to very phone. Pew, not Korea. Those guys, they hack nonsense. Remember, they were the one that hacked Bybit, Lazarus Group. So with one firm even mistakenly hiring DPRK developer. So most crypto service providers have been locked out of the EU following the expiration of the grandfathering window. So there's much to talk about this. Look at this is the data. This is the data. In the first quarter of 2025, it was 2.6 billion. In the second quarter of 2026, 764 million. But I feel this year is even better than last year. But I won't say so much better because this year had been a has been a bearish market for the market. So there's no much funds. But imagine there were a lot of funds. I can actually imagine that it might even have surpassed this or be on the same level with this. So this is something alarming, and everybody should take note of that. Be watchful of your account, take more notes of your account activity, and make sure you don't share your details with anybody. Stay safe out there. So yeah, this is a beautiful topic, which is about the Clarity Act, that is a act that is being, propagated to legalize and make crypto very, very, very legal in the United States of America. And this act had hit a fresh Senate block. And from last week, if you remember, we talked about the clarity had been pushed to at least be approved before the Senate recess that is to happen by September, and August 2026. But that actually hit a roadblock. And again, they've tried. There has been a new text released, which is very, 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 voluminous. And even one of the senators said we should expect to read a lot of articles if you want to get through this. However, there's just one point there, and that is the fact that the main thing holding down this Clarity Act to be passed is the ethics rule. And what is the ethics rule? The ethics rule is a rule that limits any top government official from either owning, operating, or having anything or sponsoring any crypto assets while in office. And not just them, anybody close to them. So, and one great thing to this is the fact that I was even surprised. The president of the United States of America, Donald Trump, even assented to sign this bill with the adjustment to that fact. However, most of the Democrats says they are not comfortable with this because if you look at it, just in the last year, Donald Trump made $1.2 billion from just crypto alone. That is somebody else's total net worth, and he made it from crypto. So preventing such people of such influence and power from sponsoring, owning, trading cryptocurrency is a very, very great idea. But I just have to also look at it at the other hand. And there's been something here, that is to say, the Senate is not prepared to advance the crypto industry's marquee piece of legislation. Democrats have broadly dismissed the latest version of the Clarity Act released by Senate Republicans earlier yesterday. The minority party is particularly skeptical of the now public ethics restriction that will cover President Donald Trump and other officials. So they said the Republicans also have their own issues. This said senator said is a no on the Clarity Act without further changes to the ethics language. This is even Republican senators saying this. And we have Cynthia Loomis, a central negotiator at this stage in the talk, says Republicans can't and won't meet Democrats on their core concern in the crypto ethics struggle. It's a whole lot of discussion, a whole lot of topic that we can actually cover up today. If you want to see the story, you can go to Compedia and you get that. So, and the last thing we also have to look at is the fact that somebody is trying to tell us what we need to understand. And that is the question of why Bitcoin is stuck near $65,000 as AI fuels inflation. There's been a lot of conspiracy theory concerning AI surrounding it, from water to energy crisis and all of that. And if you understand this, these are factors that could actually propel or plunge a country into inflation. And these are the core things that drive AI. They need water to cool down the heat of data centers, and they need energy to run the data centers. And at the same time, most investors now are pulling out their funds from every other risk exposed asset into AI because the AI sector is booming, and is booming at the expense of every other sector. Unlike the traditional ones where we have gold booming, we can have Bitcoin booming at the same time or interchangeably. But now AI is saying is pointing the finger to everybody and doing like this. So now let's read this. So Bitcoin has returned to the 65,000 range, but the recovery is struggling to develop into a wider rally. The asset traded near $65,975 on Wednesday after briefly crossing 66,000, which is its highest level since early June. So the Bitcoin ETF recorded 200 million SOF in net inflow on Tuesday, which made it 6 consecutive days of total inflow. That is a good leg up compared to June which was last month. So those inflow remain small compared to the combined $6.9 billion withdrawn during May and June. Yeah, that's true. But we have to say that this is a great figure. But if you compare it to the withdrawal that happened in the last 3 months, it is nothing to know. So, but people are feeling like the main reason or the obstacle is no more limited to the crypto cycle. Bitcoin now faces pressure from an AI investment boom that is influencing inflation, interest rates, bond yields, and competition for investor capital. So now, if you look at this, this is the data we are actually going to talk about. So this figure here, this data represented with the red color here, represent the monthly total net inflow, right? And the white here, this white graph represents the total net asset. And the green here, the yellow here, rather, the yellow graph here represents the Bitcoin prices. So now, if you look at this is the total net inflow, which was highest in September. Oh, sorry, it was highest in 2026, the early of June or July or so. But we've had it highest in September. But also look at the outflow. Can you see the outflow? And if you look at the total net asset, which is this, which is the white one, you see it is very, very high. And if you look at the Bitcoin prices that time, it has also been trying to follow this. But however, the AI boom is keeping inflation alive because it's making the resources that drive end to money supply for the common man limited. What are these resources? Energy, what are these resources? Water and many other things. It's keeping them limited. And if the demand is lower than the supply, what happens? The price goes up. So many companies can run with the normal price which they run their business. They have to pay higher because I can't blame the energy sellers as well. If I have somebody willing to buy something 10 times the rate I'm selling it, I'll definitely sell to them. And that is one of the reasons. So the Federal Reserve directly linked some of the recent inflation pressure to artificial intelligence investment in the minutes of June's meeting. Officials said strong demand for data centers, electricity, and high-tech equipment was pushing up prices. They also warned that AI investment could keep economic growth above its sustainable rate, making inflation more persistent. So if you look at many AI firms, you see that they were all declaring ridiculous amount of profit. Alphabet, raised its expected 2026 capital spending to between 195 billion to 205 billion after Google Cloud revenue jumped 82% in the last quarter. Also, Microsoft also said is expected to spend around 190 billion this calendar year, including roughly 25 billion caused by higher component prices. That is the price of AI chips and every other thing. Meanwhile, Nvidia reported that data center revenue rose by 92%. This might just be small figures, but think of it. If you're having 100 billion and it rose by 92%, that is we are having 192 billion, 92 billion increase just within a quarter. And that is crazy. Year on year, 75.2 billion on its latest quarter. The figure shows that the companies are still competing heavily for chips, service, energy, and construction capacity. So Fed Check Heavy Watch said high-tech equipment investment had grown by nearly 25% over the year to the first quarter. He said the central bank was watching the effect on inflation and employment. So higher rates leave less money for Bitcoin. So if the rate of you know purchasing commodity, purchasing energy, construction, technology chips keeps getting high, it is leaving limited resources for our dear friend Bitcoin. What do you think about this? Because this is the last we're actually going to talk about. I would love to hear from you what you think about this. Is there any possible solution we could see? Is the future just going to continue like this? Is Bitcoin going to be reduced in growth at the expense of AI growing? I'd love to hear from you. So when next I come away, stay calm and play big. See you tomorrow.